Welcome to the StockMentor.com studios here in the very springtime-ish Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. Started the week with a very muted beginning to the day. As you can see, we didn't move a whole lot by the time the whole day was over with. Mostly sideways to begin what was a very strong week last week by the bulls. So here we are, back in kind of bull territory again. The NASDAQ was strong again today. I shouldn't say strong, but it was up over the other two indices today. And after a little bit of down then up type movement, once again, basically back to break even here. 25 points down is nothing on the Dow. Big push last week. You can see resting very comfortably right on top of this 20-period moving average. So if you want to kind of dissect this out, maybe we've got a head and shoulders pattern happening here for a pullback. We're just about to kick off some big earnings. Bernanke speaks on Wednesday, so there's a lot of economic news coming down the pipeline this week. It'll be interesting to see if the bulls can continue the push they had last week. Certainly no reason not to be bullish after last week. Very strong, good stuff. Still haven't broken some of the more higher major resistances on the SPX and the NASDAQ. But the Dow doing very well. So looking at the daily, you can see where we ended up, and that was just sideways. We had that little dip to begin the day, but the bulls quickly brought that up. 12,450 looking very good as support right now, followed by 12,400 below that. To the upside, 12,500 definitely looking to be the spot to break coming into tomorrow's trading. As it is right now, push up, move sideways, lather, rinse, repeat, my friends. Move up, move sideways, all the way back here. Up, pull back, up, sideways, bigger type pullback, up, sideways, up. Then we had the big move down. But overall, very, I should say, reminiscent of what we've seen many times before. So looking to move our way sideways here. You know the levels up and down on the Dow. This is the type of look we're going to get on all of the different charts today. Here's the NASDAQ. I think this is a very accurate representation of what we saw last week, and that is the move up that started out very strong to begin the week, ended up very strong by the end of the week. However, all on gaps. Very difficult to trade this. Gap up, run a little bit. Gap up, run nowhere. Here we are just wandering our way sideways. The NASDAQ still was the strongest, looking like it wants to push itself up even higher. Watch that 2390 and then the 2400 levels. Those are your next bigger areas of overhead resistance, back below 2370 then. If you want to look at something maybe to the short side for 20 points or so, that would be your area to be watching coming into tomorrow and the middle of the week. As of right now, NASDAQ's really making a very strong comeback. And from a weekly, you can see what we put in last week. A little move, pull back, move to the upside, looking to break these overhead areas, and it could be game on for the bulls if and when we see that. Last week's volume, I want to point this out. Last week's volume, really pretty good. Remember, we had 4 days of trading last week, and Thursday was not all that strong. Who wants to trade on the day before a 3-day weekend? Not the big money. And yet, we still ended up with pretty average volume. Not too bad, actually, for just 4 days of volume. So we'll see if the bulls can continue that action this week as they try to get themselves up and over this area. I think earnings will make a big difference. Maybe Bernanke makes a big difference. It's only time will tell. But you'll want to be positioning yourselves for these breaks as the next couple days kind of pan themselves out. I really do think that this consolidation has only got a couple of days to it. Including today. So we'll say by, I think, Thursday we should really start to see things move. If we don't see, if we see sideways action tomorrow and Wednesday, by Thursday we should start to see some things moving. I would expect some half decent movement though before that even. SPX moving sideways as well. Pretty obvious what we're looking at here, guys. 1340, then 1345. I don't know if it can be any more clear than that. To the downside, you're going to want it to break some of these lower levels before you start looking at any kind of a short on the SPX. Moving quickly to the daily, though, you can see we're just sideways as we were on the Dow. This one here is just basing sideways right at this overhead resistance, waiting for that break, and that'll be your move to start sneaking in on some trades to the long side once we get up and over these levels. Here's the support below us. Areas I was talking about before. Even back below here is probably a more safe and a more fair option for those looking to short the market right in through here. I'd be very cautious. This has been a pretty good move so far by the bulls. Now they have not managed to get themselves over that 1340 area, and that will absolutely be an area of major contention going into the next couple days. 1340 is something the bulls are going to want to take and the bears are going to want to hold. So I would expect to see some resistance at that area. Watch to see if it doesn't cheat and just gap. Gaps will really do that in, and that should get the bulls on their way if we see some good gaps to the upside. VIX coming back today very, very strong, up 7.22% today, while the market was basically down just a little bit, basically flat. And the same thing goes for this. We've seen this. Market goes nowhere, VIX goes up. Market goes nowhere the next day, VIX goes way up. Market goes way up the next day. The following day, VIX goes way back down. So be looking for that coming into the next couple days. Let's see if tomorrow gives us any indication of that type of behavior again, where the markets maybe wander themselves sideways, but the VIX starts to spike pretty heavily. Let's see if that makes its difference. 1750, that's your area on the VIX to be watching for this overhead resistance, if you will. More importantly, you know I like the 1920 area to see some actual, if you will, concern start to come back into the market. Apple here on a nice move to finish last week and a wander sideways today. It was up another $2.31 today, but you can see all it has to do is sneeze and it moves $2. It's really not all that big of a move for Apple when you're a $350 stock. Below us, no change. Below 350 and above 355, still my areas to be watching tomorrow, and I think those should act and should be good trades, both up and down. Watch those very closely, giving you some opportunities to not only day trade, but potentially get in and hold for a while. We break this 350 area. Love that 345-ish area. That would be just a perfect point of support on any kind of a pullback in April. Okay, back above the 20-week moving average. Looking very comfortable up here, sitting very nicely in a sideways motion. Only one day into it. We won't talk too much about the weeklies except to say that we did clear that 20-week moving average last week. So we're back up and above good, strong support, or what should be good, strong support. FAS, nothing to talk about here. Straight sideways. You're looking at 28.75 to the short side and 29.75 to the long side. That'll stand true on the daily as well going into tomorrow, while the FAZ went sideways, $40.50 to the short side, $42 to the long side coming into tomorrow's trading. I would really like it to get back below 40 if you want to get into a short that you can maybe hold on to for a while. I'd really like it to get back below 40 and definitely back below, I'd say maybe above 42.50. If you want to get into a long, you might be able to hold that one for a while. Ultimately, it's $44, but we'll see if it gets there in any kind of a timely manner. So if you want to be more aggressive, above that $42.50, below $40 on your long and your short for FAZ into tomorrow's trading. Okay, let's see. That does it for today's video. Let's go over really quick what we did last week. Adobe, this was on my subscribers list last week. This was a short below 37 or 34, 33.75. We got a little bit of a break. It did not pour itself downwards by any means, but overall, not too bad of a trade. We made a little bit of money on this one by the time it was all said and done. VMed was my baby last week. This was a long over 28 bucks. I told a lot of them if they wanted to go ahead and hold into today if they wanted to. I liked what it was doing, what I was seeing last week, looking for upper areas of 30 plus maybe in this particular stock. But if you're not in, obviously you missed your entry. 28 was the entry last week, and this one had two very, very strong days of running. I think it was up 6% or something by the end of the week or whatever. Anyway, it was a very, very strong runner for us last week on the subscribers newsletter. These were the ones I took off. X is another one I took off from last week. This was one we were in 2 weeks ago. I left this one on for 2 weeks. Loved it below this break here of $52, and we played it down into the 200 period moving average, made a couple bucks on that trade. I held it one more week to see if we could get this low base to pan out and drop. It did not do it the way I wanted it to. It gapped. It gapped down as opposed to moving down. So those that stayed in it short did very well on this trade. Those that were going to try to get in below the 200 had no trade on X. Then after that it wandered sideways, which is what it's doing now. So I kind of took the trade off after I saw this second day of action happen here. We were done with that for the week, but it is one that I had on for a couple of weeks, and we played it for a little while, making some pretty good profits on this one as well. But it was also off the chart. So Adobe, VMed, and X were all taken off of the chart. I've got a couple more that I'm holding on to that we're playing again this week. Every week I change my stock picks. Sometimes I leave them on for an extra week or two just to see if they'll break. Sometimes they don't break as soon as I think they're going to. So we leave them on and we try to make what we can off of them. But if you're curious as to my track record, feel free to go back to previous Sunday or Monday, I think mostly Monday videos for the daily subscribers. And I've been doing this a lot lately where I just show you what I did last week or what came off my subscribers list. So for those of you interested in the newsletter, at least you have an idea of what goes on. Now, in addition to this, I cover a lot more of the indices. I cover the Russells, I cover the FTSE, I cover gold, I cover oil, I cover the dollar, and then I have individual stock picks that we look at as well all week long. And then as the dogs are taken off the chart, or as the winners or losers, whatever they might be, are taken off the charts, I show them to the daily viewers and I put brand new trades on the following week, and we see how those pan out. So you've always got a huge selection of things to choose from. Regardless of what your tastes are, regardless of what you like to trade, there's something for everyone on those charts. Something you should definitely try out. $28 a month. You can cancel anytime. It's definitely worth $1 a day. You're going to spend that on a couple of meals at McDonald's. And we've been, I'll tell you, I know this famous last words. I almost hate saying this, but it's been very, very good lately. I've been very happy with how the trades have worked out the past few weeks. We've done very well. I think last week we had about a 14% gain, and this week was a 5 or 6% gain, and that includes the losses. Sometimes we get into trades where we get stopped out and we don't make any money on them, but we keep those pretty tight. We've done a really good job of managing our risk very, very well, and our winners have been very strong for us lately. So if you want to be a part of that, sign up. You can use the ad on the right side of any of the pages. Just click it, sign up via PayPal. If you don't want to use PayPal, I get it. I understand. Write me or call me. We'll work out other arrangements. It's not a big deal. Some people don't have a PayPal account. They don't want a PayPal account, or they don't like it. That's fine. We can work around that as well. Give me a call, send me an email, and we'll get that fixed. We'll get you fixed up. All right, once again, I will try to be back with you again tomorrow. If not tomorrow, I will definitely see you on Wednesday. Until then, safe trading. Talk to you later. Bye.